This is an I Am Listening original podcast.
In order to complete by the 31st of March, you've got to be looking and finding a property in November and December latest to have a chance of completing. So one of the consequences, there could be a bit of a flurry for first-time buyers to purchase now, because £6,250 is a lot of money to find next April.
Welcome to Series 2 of the Property Podcast with Wards and me, Gary Wilson, the weekly podcast where I'll share with you all the latest Kent property news, as well as speaking with industry professionals to offer advice and tips that will hopefully help make your house move journey a little less stressful. Welcome to episode 7 of the Property Podcast with Wards, Series 2. In this episode, I sat down to discuss Labour's autumn budget with some very special guests from Wards. Aldo Sotju, Group Managing Director, Jason Bunning, Managing Director of Operations, James Stefani, Lettings Business Development Director, and Neil Piper, Senior Operations Director. Enjoy the conversation. So the budget has been, and there's lots to consider in the housing market across Kent. So let's start with additional stamp duty on second homes. How is that going to affect things? Who for? What's the story here? What do we need to know?
The headline here is for landlords and for anyone buying a second property or an additional property not to live in themselves. There's an additional stamp duty levy that used to be 3% since, I think it's 2016. It's been increased by an additional 2% to now be 5%. And that was an immediate change the following day, so from the 31st of October. So what that means, basically, if you're buying an additional property, so anyone out there who's aspiring to be or soon to become a landlord, you're going to pay a bit more in tax to the tune of, well, it's 5% on the whole amount of the purchase price. So stamp duty, I think, is one of the more complicated taxes to live.
Yeah, different thresholds.
Has different thresholds at different property values. From a landlord's point of view, those also apply, but now you're looking at an additional 5% on the purchase price as well. So if we take a really easy example where currently no stamp duty would be payable at all, so £200,000, probably looking at sort of smaller properties, smaller typical investment sort of properties.
Probably not a lot that fall into that.
But it's an easy example. So if you're buying a property at £200,000 to live in yourself, you pay no stamp duty currently. As a landlord, since the budget, you're now paying £10,000 in tax. So that's gone up by £4,000 pre this budget.
Did we see this coming? Is this something that was likely to happen, either that they talked about in their manifesto or they'd hinted at, or was kind of expected because they're a Labour government? Was this a surprise to people?
I don't think it was any surprise at all. The government's got to raise revenues, and landlords and investors are a relatively easy target.
I think the possible surprise was that it was immediate, and I think there was probably a strong argument for it coming in from April, but for it to come in immediately, it obviously affects buyers and chains instantly, which has caused us a little bit of a problem.
What is that initial impact to someone who doesn't understand the market terribly well and the numbers and all that kind of stuff? What happens now, or at that moment, what happened as far as the market? Were people suddenly like, no, we're not going to go ahead with this purchase? Or what was the sort of initial effect?
If you can imagine, there was a high proportion of buyers that were buying second homes, and instantly overnight, their exposure for stamp duty went up considerably. So if you weren't able to complete by the drop dead date, then the following day you've got to find additional sums of money in order to complete your purchase. So the consequence of that are a number of landlords would have considered, or buyers would have considered, whether it's viable for them to now proceed with their purchase, because they've effectively got to find additional money from somewhere. The impact that had on the housing market, estate agents in particular, was a lot of running around trying to renegotiate prices on purchases, and consequently there were a number of people that changed their mind and withdrew from their purchase.
I think the wider picture is that these investor buyers were involved in chains. So there are a number of properties above them or below them that would have been affected. So the following day, and as an example, we were renegotiating prices to offset some of the costs to keep these chains together. So it wasn't just the investors and landlords that were affected, it was everybody that was involved in a chain with them. So had a pretty big knock-on effect, and you can imagine that people were very close to exchange, and it's knocked it sideways. So it would have been a major problem.
Yeah.
I think it looks like a good proportion of the issues have been resolved by decent estate agents doing what they do, which is renegotiating prices, and not good news for anybody. But we managed to resolve a lot of problems, but not all.
It's an interesting move because it's obviously to generate income. But if the result of that is that investors think twice about buying, then the consequence is that you actually might generate less revenue than you had before. So we're kind of speculating at the moment to the extent to which investors are going to continue buying, but certainly they will be very mindful of the additional costs, and that will have a knock-on effect on offers that they might make on properties. So ultimately, there's going to be effectively a price to pay somewhere down the line.
Yeah.
For pure landlords, they will also look at offsetting that cost or recovering that cost back through rents.
Of course they will.
So the outcome of this isn't always the one you expect or the government are expecting. They're thinking greater revenue maybe discourage some landlords, freeing up properties for first-time buyers, which is a great idea. But at the same time, if there are fewer investors, rents will rise because demand will continue to increase. And the people who are in this as professional investors will always recover their costs, and they can recover increased stamp duty through and offset that against capital gains tax in the long run. So
they back it one way or another.
They get it back one way or the other.
I think in terms of theory, it's you want first-time buyers to have access to decent stock and decent properties. But I think theory is one thing, reality is another thing, and there was no additional help for first-time buyers in terms of getting a deposit and getting preferential rates. So I think it's going to be difficult whether, there's plenty of people around that do want to buy, that can't buy. There'll be stock available now that maybe investors don't buy, but it doesn't solve the bigger problem because there was no additional measures in there to help first-time buyers.
You mentioned capital gains there. There have been changes as far as capital gains go. So how does that all tie in with that, or have bigger, knock-on effects as well?
Yeah, there have been. I think this was one of the ones that could have been worse for the property market. What they've effectively done, they've kept capital gains specifically on property the same, and they've matched the capital gains for other assets with the property rates. So for a basic rate taxpayer, it's going up from 10% to 18%, and for a higher rate, it's gone up from 20% to 24%. So property's been left alone in that respect, which at face value is quite a good thing initially, but it makes you wonder, is that something they're keeping up their sleeve for next year? So potentially now for landlords, people with second properties, they're thinking, well, now might be a good time to sell because I could get clobbered potentially in a year's time for a bit more.
I think there's also some changes planned for non-domicile tax status. I think it's going to be phased in over a longer period of time. But that could be that might be replaced by a residence-based system. And that could mean that foreign investors might be less inclined to invest in the UK property market because of changes to their non-domicile status.
If someone comes in from overseas, wherever it is, let's say Japan, and buys something here, if you've got your positive hat on, you say they're investing. If you wanted to be more negative, we've sold stuff that we once had and now we haven't got it anymore. How does that, as far as you guys go, from your point of view, from your perspective in estate agency and property, is it one way or the other, or are you somewhere in the middle there that, we're selling off stuff or we're investing stuff? How do you see it, or does that change with the market?
I think it does change the market. It's all about, supply and demand. So the demand for property will be impacted by, tax benefits. So if there are less overseas buyers that are looking to invest in the UK property market, if that demand reduces, then that can have a knock-on effect on volumes of transactions. And if fewer properties sell, then that would have an impact on house price inflation. So that could curtail house price increase, so that could be damped down a little bit. So anything that impacts someone's incentive to buy property is going to have, somewhere down the line, is going to have an impact on demand. And if demand reduces, then there's a knock-on effect.
So
prices.
you've got the investment aspect of it, which, that you've explained the sort of pros and cons there, with the fact that that's a property off the market if it's sold, or at least you might have a landlord, or with there being a crisis of numbers of property at the moment, does it have a direct effect? The investment comes from overseas, does that have some kind of other effect on where?
I think it's all about the confidence to buy in the market, isn't it? So the whole housing market is based on economic confidence and the tax breaks and the benefits that you would have in order to encourage you to buy. So it's difficult to put a financial figure on those impacts. But if it's less attractive to buy property, then fewer people will buy, and as a result of that will have an effect on prices somewhere down the line.
I think it's a metropolitan thing as well. I think it's major cities and towns where this becomes an issue. Certainly, across our patch wouldn't be something of a massive consideration. But if you're talking about London, any stock being taken is going to be inflationary. But it depends what they're doing with it. I think the resentment comes when property's being bought and it stays empty.
Yeah. Second homes.
Yeah, absolutely. If it's an investment from abroad and someone's renting that out because they've got a decent yield and it's a good investment, someone's going to rent it and someone's got a home to live in. So it's a swing where the money comes from as far as a tenant is concerned is irrelevant really, but that kind of thing is a London, Manchester, Birmingham kind of issue really, where the money's coming in from abroad.
And what there wasn't in the budget was an empty homes tax, which I thought there possibly would be.
Could that still come down the line, do you think? Because it is something that a lot of people have talked about. Obviously there's an argument, it's my house, I do what I like with it. Does it look like, especially the shape of the economy, that might be something?
I wouldn't be surprised if it followed. It's difficult to know, but I think probably a measure like that would be fairly well received, I would think. So I would have thought it would have been better to do something like that as opposed to a tax which really has a negative effect on the market, as per they've done with stamp duty. So
it's early days for this government, but I think the early signs are they're not frightened to intervene and do fairly controversial things in terms of interfering is probably a strong word, but they are happy to get involved in the market and make things happen. If proposals came forward, it would be really interesting to look at, because it's something that we've been talking about for a long time. It's driving past empty properties day after day after day is just really frustrating when they're in the business what we're in, and you're thinking that's a home for someone, and it's area redevelopment. So it's no one wants to live next to an empty property for 5 years because it brings the price of your house down, and someone could be using that as their home.
Lack of changes to mortgages and what that could mean for rates. We've talked a lot about the rental, but actual purchasing and the mortgages, which obviously may be for landlords, but for private buyers as well. How's that going to affect things, that lack of change almost?
It's an interesting one. I'm actually buying a house at the moment, so I've been very, very close to mortgage interest rates. And from my point of view as a buyer, I think a lot of people are in the same boat. Before the budget, we were hearing lots of talk about rates coming down in November. And I'm thinking, great, do I not exchange contracts on the purchase until rates have come down? And now the budget's happened, the talk is now about, well, we're increasing our borrowing as a nation. That makes lending to our government higher value. So there's probably less confidence now in the mortgage market, and I'm not sure that rates are going to come down.
No, I think the reality is first-time buyers are paying £350 more in mortgage payments than they were 5 years ago on average, which is substantial.
How does that affect people going into smaller properties? Are they just putting the purchases off? Is there a big mixture of things? What's the overall impact you're seeing with that, that change, which is a mixture of what you're talking about here, which is what the new government have brought in and what happened especially under Liz Truss's government that jumped everything up?
If you look at the long-term mortgage interest rates, it's still relatively cost effective. So if you look traditionally, average interest rates over the last 10 years have been somewhat higher than rates that are currently available at the moment. So the underlying trend is based on inflation. So inflation, I think, is just under 2%. That was the government's target. So I believe that the medium-term view on interest rates is they will probably start to come down a little bit. I mean, you can get a 2-year fixed rate for 4.5%, 5%, a 5-year fixed rate, a little bit less for 4.5%, and standard variable rates are about sort of 5.5 to 6. The long-term trend is, I believe, those rates will come down. So
there's a lot of nodding going on. But
we had 15%, many years.
Yeah.
So I think the current interest rates are sustainable, and I don't think that that's going to have a massive impact on the volumes of people that are looking to buy. I think interest rates are actually at a reasonable level. I think it's more confidence in the market. It's about stability of employment. It's about the whole economic picture. It's about stability of salaries, and obviously there's some positive interference the government's making as far as that's concerned.
Yeah.
So that maybe that's a good thing.
yeah, I mean, you talk about the positive interference, and you were talking about you used the word interfering, then you kind of
Intervening's probably
intervening. Yeah,
It's a
that's
better word.
it. We'll go with that. The fact they're maybe doing something when a lot of stuff has not happened for the last couple of years, maybe while the last government was doing whatever it was doing.
Yeah.
Does that buy into the confidence thing? Does the fact that actually doing something, even if it might be questionable as to what it is, the fact that something is being done rather than people fear the stuff that's not being done that they think might happen, is it better that stuff is actually happening almost regardless of what it is?
I think that's a good point, and I think we've had 15 years of coalition and Conservative government, and there always needs to be checks and measures where things naturally change. I think as long as the change is well thought through and the outcomes are considered. We're talking about interest rates. I don't think interest rates are particularly relevant. I think the biggest problem is first-time buyers getting deposits, because the house prices are very high and deposits are really difficult to get hold of. I think you look at interest rates, the rate they are now is probably about normal. The rate we've had for the last 7-8 years at 2% is weird. That's been weird and not healthy, really, for any economy running at 2%. It was running at 2% for a reason, and that's because things weren't quite right in the economy generally. So, 4 to 5% is quite a healthy rate. What this government's doing, I think it will be interesting to see how things unfold and whether this is the first steps in what they're going to do with the housing market. But it's been, as you said, there's been a certain amount of anticipation of this budget, thinking there was going to be more happening and it actually didn't.
Right.
It didn't really deliver on some of the things that we'd been thinking were going to happen. So capital gains was pretty much unchanged in real terms. They hadn't really done very much in terms of help for buyers, which is disappointing. Because, we were anticipating, there was a lot of talk about we want to grow the economy and we want to make sure that that's how we're going to pay for things. There isn't very much in terms of growth here, certainly in terms of our remit, which is the housing market. There isn't much that's going to get things moving.
Right.
And there isn't a turbo boost in there for anybody really, which is what we were looking for, because the housing market drives a lot of our industries.
I think one of the biggest disappointments, as you just picking up, was needing to have greater expansion for first-time buyer support. So the Help to Buy scheme, which significantly drove purchases for new homes, that scheme effectively hadn't been replaced. So the government were providing between 20 and 40% loans inside London, which was a significant amount of money in order to make a new home more affordable. So what was disappointing, there hasn't really been a viable alternative to that to first-time buyers, and that will have an impact on new homes and new homes market, and also there's still far too many restrictions when it comes to planning restrictions and hoops that you have to jump through, which will also prevent or hold back the supply of new homes onto the market, and that's something I think that needs to be expanded on as well.
I think that's a really good point. I think if they'd connected the additional levy on stamp duty for investors and earmarked that money to help first-time buyers, I think it would have made a lot of sense. because that stock that's not going to be bought by investors, then you're creating an environment where first-time buyers can buy. It would have, as I said earlier, it would have been joined up. It would have been a good use of, ideologically, we want to change things. We want to move from there to there. And that would have been a straightforward move. But the additional stamp duty, if there is any, that comes from, investors, is going to be gone into the black hole of everything else. And as I say, it was just disappointing that first-time buyers didn't really see very much from it at all. In actual fact, come April next year, stamp duty levels fall back to where they were, and that will inevitably mean that certainly in our part of the country, first-time buyers are paying stamp duty again, which they haven't done, and the government didn't reverse back the changes that the Conservative government were going to change anyway, but they didn't change their mind on that, and stamp duty reverts back to where it was previously in April next year. So there's probably going to be a bit of a rush to buy in the beginning part of next year for first-time buyers and others to beat the stamp duty changes.
I think the challenge, though, for first-time buyers, Jason, is whether they can get their transaction through quick enough. Because if we look at sort of average transaction lengths at the moment, you would probably need to be agreeing a purchase now to complete in time for the 31st of March. So I think the buyers, particularly the first-time buyers, will be under pressure. I think a lot of first-time buyers probably don't know the stamp duty thresholds are reverting back to the levels pre-September 2022.
I think I'm right, that's from 300 to 4.
Yeah,
I mean, 425.
For first-time buyers, it's 425 at the moment, and it's going back to 300.
300 at the other one.
So, that means that a first-time buyer buying currently at 425 is paying no stamp duty, but they'll pay £6,250 stamp duty from the 1st of April.
And the point Neil was making, that in order to complete by the 31st of March, you've got to be looking and finding a property in November and December latest to have a chance of completing. So one of the consequences, there could be a bit of a flurry for first-time buyers to purchase now, because £6,250 is a lot of money to find next April. So it'll be interesting. We haven't seen too much evidence of that at the moment, but I suspect once that penny drops...
Well, I think it's our job as agents to really educate the buyers now and quickly that they need to be mobile and they need to be buying somewhere.
Yeah.
The thing about one of the consequences of that, though, Neil, is that if you're bringing forward your house buying decision, it just means that you are effectively, bringing forward that consideration.
Yep.
And that after the 1st of April, the people that would have been buying at that time, you just brought it forward. So again, it's artificially driving the heart.
We had that with COVID, didn't we?
Yeah. So it's not help. These incentives aren't helpful, because you tend to get spikes in interest and activity, and that makes it, fluctuating demand makes it very, very difficult to contend with.
It helps the politicians on all sides sort of argue their case, because obviously when the peak's happening, it's look at us, and when the slump's happening, it's look at us. Yeah.
As Kent's local independent estate agent, Wards utilise years of experience and expertise to promote your property in the best possible light to the largest possible audience. For more information, receive an online valuation in less than 30 seconds, or book an in-person appraisal of your property with us today, head over to wardsofkent.co.uk to find out more about our unique approach.
You've kind of touched on things that you might have been expecting from the budget. What else did you think was missing from the budget, or maybe were you expecting?
Or would we have liked?
Both, I think. I think both. It's important to find out, really, as you're the guys that know.
I think there's still the opportunity and the argument for actually reforming stamp duty completely, and I would be in favour of them ripping it up and starting again, because it is complicated. So I think there was the opportunity to reform stamp duty. Probably a little bit more extreme would be a total tax overhaul. total review of taxation, possibly combining income tax and national insurance. I mean, national insurance is pretty much just another income tax. So I think there's an opportunity to do that. It would have been nice, as Jason said, it'd be nice to have seen some more help for first-time buyers. I think there were probably a couple of missed opportunities, or a couple of things that would have been beneficial from a market point of view.
I think from a tenant's point of view, some of the people at the lower end of the housing spectrum on housing benefits, they haven't received any help in this budget either. Housing benefits being frozen again, rents continue to rise, so that's not helping them meet the living costs of finding a decent standard of property to live in as well. So it's one of the things you would expect perhaps more from a Labour government is helping the lower end of the housing market a bit more.
And if there is a bit of an exodus of landlords from the marketplace, or a lack of new landlords coming in, it will put more pressure on rent, which inevitably will be problematic. So I think it's created a bit of a problem by, I would have gone, it's very counterintuitive, but there's a lot of pressure in the rental market at the moment on rent amounts and stock. There always is, and it would have been very counterintuitive, but I think it should have been an investor friendly budget, if anything, where they reversed some of the changes they've made to investment to encourage people much more into the buy-to-let arena, to create a bit more stock, which inevitably would mean there's less pressure on rents going up. It's probably never gonna happen under a government of any colour, because it doesn't make great headlines. But in terms of a sensible decision, having more rental stock has got to be a good thing.
It's kinder to tenants, isn't it?
In the long run, but it doesn't make great headlines when you're looking after people that are looking to invest, large sums of money. But it would have definitely helped a lot along the line for sure.
What about the talk of the 1.5 million new houses over the course of there's eyebrows raised there? That was interesting. That seems obviously like that would be potentially quite a game changer.
It would be. I mean, one of the issues is the need to streamline planning permissions, so it eases that process. So it's all well and good making commitments about building and developing, but until the process is more streamlined,
you touched on this earlier.
It just happens to be a very a headline figure. The reality is the cost of construction often is prohibitive. There's, going on to a different subject, there is an issue perhaps in terms of skilled labour shortage, cost of materials. So inevitably, it is a great headline figure. And yes, we do need more properties being built, but there are issues when it comes to delivering on that.
And outside of the market, there have been changes to national insurance. How's that going to work out, and how's that going to affect the market across Kent, particularly in the long run?
Okay, so all companies will have to pay an additional sum of national insurance. That's effectively an additional 1.5%. Was it 1.2%? But also the thresholds changed from 9,100 to 5,000. So if you look at medium-sized businesses, I suspect the average additional contribution from an employer will be £750 to £1,000 a year per employee, and that's pretty significant. So what are the problems employers will have is if they're having to pay out, and they will have to pay that, then there'll be less money in the pot in order to provide further salary reviews, because staff don't benefit from that levy. That's just companies that are having to provide effectively into a social fund that's missing. But where's that money coming from? It comes from companies' bottom line. And if the bottom line is being affected, then there's less money available in order to review staff's salaries. So you can't have it both ways.
And employ additional staff. So, I mean, it really is, it's a tax on employment. I think it would be, I think it would have negative impacts in terms of growth. I think we've seen the growth forecasts for this Parliament are pretty low. I think it's 1.5%, which is low. So I think it was 25 billion coming from the increase from employers' national insurance contributions, and it's it's a tax, it's a tax on employment and a tax on jobs. So I think it's fairly substantial.
The other thing that hasn't really gone away, the press are loving the farm story. Might not affect you guys as much, I wouldn't have thought, but as far as the wider market, maybe there's something there as well. But just seeing it as it is such a big story, and the people that are getting a lot of headlines, like Clarkson and Dyson, obviously they're big names, and a lot of people will look at those stories and wonder exactly what's going on beyond the headlines. How are you guys reading that?
Yeah, what we're referring to is the inheritance tax, effectively.
And it probably doesn't affect Clarkson and Dyson.
No.
But I think it's a big issue, and I wouldn't be surprised if it's something the government need to row back on, because farmers work incredibly hard, often for not very much money at all. And for a farm to be viable, you need to have lots and lots and lots of acres. And for that to be pulled into inheritance tax makes it nigh on impossible for farms to be businesses to be passed on through the generations, and it feels wrong. And it probably wouldn't affect the two gentlemen that you mentioned, but it probably would affect a lot of hardworking farmers.
I think they are saying it's less rather than more of the farmers, but it's certainly enough.
Yeah, their margins are squeezed already, and I wouldn't be surprised if it's something the government need to look at and possibly row back on. So
you didn't feel like it was a levelling of the playing field slightly, where everyone else has to. Why don't farmers? I think feel like because of their situation that they're a special case.
There are some special cases. They're family-run businesses. I think the ones that are going to be at 25% of farms are going to be affected. Mm-hmm. It's the ones that I think we've all got a bit of an emotional attachment to. It's the local farmer up the road that's a family-run business. It's not one of these factory farms. It's people that look after the hedgerows, and Kent's a pretty rural area. And I think it's we're talking about it's easy to talk about food security and all of those things, but sometimes you've got to have some special cases. I get it's almost an impossible position. What's a good tax? Who's going to welcome any tax at any stage? So you've got to find it from somewhere, and I get that. You can't have it all, but I think it's about where you do target things. And I think whenever the little guy is under a bit of pressure, and I think just seen, as everyone has on the news, some pretty heartbreaking stories where farmers are telling their sons and daughters that they're not going to be able to inherit the farm. It's going to have to go. It's going to have to go on the market when he dies. He can't take over the family farm, which is appalling, really. But as you say, I think whether they will review these things or water them down when they come through Parliament, you hope there's a bit of common sense at play, really.
Yeah, the balance is that often farmers are properly rich, but income poor.
Yeah, okay. You're only rich if you sell it.
Yeah, exactly. Yeah, and then you've got to raise funds in order to pay those taxes. Where's that coming from? Because the income from the farms is very limited.
It's inheritance tax or what used to be called death duties. And I think you're already going through something a bit horrific anyway, because you've lost, a relative. And then on top of that, you might be losing your livelihood, which, strikes a bit of a note sometimes.
Yeah. I mean, obviously, anything can happen to anyone at any time as far as passing on to the netherworld. But they do have a chance as well to pass on. Is it 7 years before, or they give them a 7-year window to pass it on and avoid those?
Everyone.
That's the same with.
So So there is a chance the family line could continue. Yeah. But obviously there are a point where that couldn't happen.
Yeah.
You've put on your little forecasting hats a little bit, but to end, what from now, what obviously everything's kind of in flux, as it always seems to be in the property market, but from what you've got that's solid in black and white from the budget and what's coming your way, what predictions would you be willing to make at this point about the market generally?
Well, it's always difficult to speculate, isn't it? And so,
where's the crystal ball? Yeah, let's get the crystal ball out. Gaze into it. What are we seeing?
I think I'm going to go out there then. I don't think you'll see much of a change from investors. I think they'll still be there. I had a quick look at some numbers last night. Didn't see a significant change since the budget. maybe just below average numbers looking to register to buy still. So I don't think we've seen a huge drop off. I think
they'll start to factor in stamp duty as a cost of buying. I think that's what will start happening.
I think that these changes from a landlord's point of view tip the balance towards buying a property under a limited company. I think it was a little bit marginal before, depending on your situation, depending on what you wanted in the long term for your property. But now I think it's certainly more favourable if you can buy a property under a company to do it that way. There's different tax situation completely. You can draw the income in a different way and it's subject to corporation tax rather than income taxes. And I think from a landlord's point of view, you definitely need specialist advice, don't get me wrong, but it's certainly worth considering.
We are seeing more and more landlords going down that route, aren't we?
We are. And I think since this budget, it certainly looks like the right way to do it from my point of view, depending on your situation.
I think the market's always been robust, and probably the most important factor is cost of borrowing. So at the moment, cost of borrowing is pretty stable. The direction of travel is interest rates are going to probably drop over the next 6-12 months. So that affordability, that will be the main stabilising influence on the market, regardless of all of the things we've spoken about. There's gains and losses, but ultimately it's the cost of borrowing that is probably the most important factor.
Cool. Well,
I'm going to be really boring. I'm going to be really boring and say nothing much is going to change. I think it's pretty nailed on that there's going to be a spike in activity around March, April when the stamp duty changes, and then it will get back to pretty much a normal position. This is going to be a statement that will date, but I think a lot of it depends what happens in the American elections.
Yeah,
because
let's not go there.
That will inevitably have a ripple, depending on which way that works out. But we've got no control over any of those things. We know what we know, and as Aldo says, the market is remarkably robust, and we'll always find a way. And find a level. So it's I think pretty much steady as she goes for the next couple of years.
Before we end then, is there any other business, anything we've missed? It seemed very well covered.
If you're looking to move and you want to save some money on stamp duty, I think we've identified earlier on, now's the time to start. It's no good waiting probably until the new year. You're going to run out of time and potentially be £5,000, £6,000, £7,000 worse off in real terms. So that would be the best bit of advice I could give, I think.
Yeah, if you're a first-time buyer now, waiting to see what happens to interest rates, don't wait. Find the house, and if interest rates change between now and before you exchange contracts, you can change.
You can renegotiate a mortgage offer. Yeah, exactly right.
Go and see the estate agents is what the estate agents say to everybody, which is quite the right thing as well. Jason, Neil, Aldo, James, thank you so much. Don't forget, it's always a good idea to consult with a financial advisor, solicitor, and estate agent to help you navigate the home buying process and answer any additional questions you may have. Thanks again to all our special guests for their insights and expertise. You can check out this episode and previous episodes at im-listening.co.uk or wherever you get your podcasts. And don't forget to check out the Property Podcast with Wards next week. See you then, and make sure you hit the subscribe button. Thanks for listening to the Property Podcast with Wards. If you'd like more information on the subjects that we've covered in this week's episode, just head over to the Wards website at wardsofkent.co.uk, or you can follow us on our social media channels. You can check out our latest episodes at im-listening.co.uk or wherever you listen to your podcasts.
This has been an I Am Listening exclusive podcast. For more information, head over to our website, im-listening.co.uk.